Welcome everyone to Reliance KPMG webinar, Future-Proof Your Business Using Scenario Analysis for Operational Continuity. I am Earl McCandless, I'm Commercial Risk Advisor at Reliance Insurance Agency, and I will be your host this morning. Please note that all microphones will be muted during our presentation, but we welcome your questions and comments at the end. There are two ways to pose a question. Either by clicking on the participants icon at the bottom of the screen, then click on your name and hit raise your hand, which will alert us that you have a question, or ask a question in the chat box below and we will read it at the end of the discussion. All questions are most welcome and we encourage your participation. We're all facing unprecedented uncertainties, and this morning we're looking to bring some solutions on how to navigate through some of the financial challenges current and ahead. Reliance has been hosting weekly webinars of late to try our best to keep things as normal as possible and to bring value to our clients, our friends, and the community. Reliance was established in 1980, headquartered in Burnaby, with offices across Canada and 120 insurance professionals. We are one of Canada's top 10 privately held brokerages. And our motto is protection beyond insurance. We go beyond by helping you protect your assets, your people, and your brand. Today is not about insurance. Today, we want to talk about how to build, protect, maximize, and model your cash flow forecasts. Our friend Ken Sue of KPMG is one of Vancouver's leading authorities on this subject, and he is our featured presenter today. Ken is a deal advisory partner based in Vancouver with 25 years experience helping companies secure investment, conduct due diligence and financial analysis, and negotiate deal terms. His industry experience spans most sectors, and he's a fully qualified CPA in Canada and the US, and is a CFA International. We are privileged to have Ken join us today. Welcome, Ken. We're really excited to have you here with us today, help our clients and our friends with some of their financial concerns and questions during this pandemic and beyond. There's a lot of things changing. Even today is a new day as we move into phase 2 of getting back to business. Maybe a good place to start would be, Ken, what are you and your KPMG team currently seeing?
Thanks, Earl. I really appreciate that. And certainly it's a real pleasure to be here with everyone today, and certainly thank everyone for their time as well. You know, as Earl said, these are really unprecedented times, and I'm sure everyone online knows that, and I can feel that every day, right? It doesn't even matter whether it's around your discussions around the dinner table or, you know, when you exchange pleasantries with someone on a new, virtual video conference, or you look at what you're going to do that day with respect to your business and planning for your future. So I think, you know, even though we all know that, I thought it might be useful to just put a snapshot of a few statistics up there for folks to sort of, again, I don't know if remind is the right word, but maybe put things into this is from a, and some of you may have seen this before. It's the, it's data from of Commerce for border trade as well as the business account, and probably 2/3 almost looking at 50%. And that's a really significant impact, right? And then you talk about the number of businesses that have had to been closed, and how significantly the overall employee workforces have been impacted, as well as the number of shifts that companies have had to make with respect to their business models and adapting to the circumstances. So it's really been absolutely huge here in BC as well, of course, across Canada and then around the world too. And I think it's really just beginning. I think Earl alluded to it. It's today's more about taking stock of where we're at and how do we go from here, and what do we need to do to prepare ourselves for that future.
Right on. Those are really sobering numbers up there, Ken. It's and we hear a lot of things on the news, but I haven't heard a lot towards this financial piece, and really it's quite staggering. tell me this then. So why is scenario analysis so important, and what should companies be thinking about when doing scenario analysis?
It's something that people talk about a lot. I mean, you hear it a lot in conversations, this whole concept, but I think, it's not something that people do a lot of every day, right? I mean, I think if you think about it normally, when you're running a business, it's probably something you do maybe sometimes only just once a year, right? During your annual strategic planning session, possibly in your envisioning for the future, with your senior executives, or possibly in redefining some new business areas when you see something happening, right? So it's something that probably isn't turned into a process or operationalized by most companies. So, really what it is about looking at all the different scenarios and making sure that your organization, from a business model standpoint, from a operations standpoint, and from a people standpoint, is ready to tackle what could come at you. And I think in this time of crisis, obviously, I think everyone on this call has been doing some form of scenario analysis and thinking about what you need to do. But I think one of the things that we wanted to raise today was oftentimes we see good intentioned or well thought out plans that are perhaps not considering all the different scenarios. And what I mean by that is they might be a little bit too near term, or they may sometimes too quickly jump to eliminating less likely or remote chance scenarios that are deemed to be unnecessary. So I guess if we wind the clock back just even a few weeks, I think a lot of the companies we would talk with were projecting things like, May 1st to May 15th, May 30th as scenarios. And, I'd suggest that that's probably not the way to use scenario analysis, right? Those are like perhaps some sensitivities and some shifts in your model. But when you're talking about considering scenarios, you need to really be thinking about longer term and more serious situations. So for example, what if you can't restart until August? What about December? What about Q1 2021, right? And, a lot of folks in the call might be thinking, well, that just doesn't sound right? I don't think it's going to happen. I think, that's part of the point, actually. Like the scenario analysis, a lot of it's about considering more serious what ifs and how do you deal with those situations. So sure, I don't know if I need to wait until 2021, but what if that happened? Can I handle it? And how would I handle it? So I think that's what I sort of wanted to say here as a reminder to everyone. Let's try to make sure scenario analysis is a bit more comprehensive, and that we've included all of these, less likely scenarios, and not jump to the conclusions right away, because that's what could potentially make your view a bit more narrow and not allow you to consider all the options, that some of which could be important to think about.
I think what I hear you saying, Ken, is we want to be optimistic, and it's human nature. We've been 8 weeks in now, and we want to believe we're going to come out of this. And there's some evidence as things start to open up again that may be possible. But when we're dealing in this with scenario analysis for an operational continuity, we really have to be conservative and weigh in all the things that they're talking about, like, for example, a second wave, and it's not really over. And we seem to be doing okay in British Columbia, but not so much in Ontario and in Quebec. So really, you want to be very conservative. Like, I know your business is very conservative, as is ours. At the best of times, I think we really want to be cognizant of that there's so many unknowns here that you want to lean in that direction.
Yeah, no, that's right. I completely agree.
Right. So why can you speak to why it's important to have a robust cash flow forecast during these?
Yeah. Mm-hmm. Absolutely. And so I think the robust cash flow forecast is really tied in with the scenario analysis. And so when we talk about building out the different scenarios and covering all our bases, and as Earl said, being conservative and making sure that we've covered all our bases, the cash flow forecast is really about tying all those different scenarios to the potential cash flow implications and what that means to your business, right? Obviously, as we know, cash is needed to keep things going, and having an accurate outlook on cash is really important. We need to make sure from the scenario analysis piece, we're pulling in all the right people, we're getting all the data from the market, And we're using that to build a very robust forecast so that our planning around working capital and financing and cash in the bank and all the ins and outs and flows, with our suppliers and our customers and our employees, and are all, first of all, that what needs to happen can happen. And if they can't happen, we need to figure out what we do about that, right? There's going to be a lot of needs to change business plans and make tough decisions, and, and figure out how we roll with punches along the way. So I think the importance of having a good cash flow forecast is really tying in with all the different scenarios and making sure that we're prepared for anything, and that we're also able to run our business day to day.
Right. So what you're saying, you got to be extremely flexible in these scenarios, and you also really have to be on top of things. Much more so, as you said before, you might do this once a year. This is more of a fluid process that you're going through continuously, and you've got to be ready to make those changes.
Yep.
Can you speak to some of the hallmarks of a good model, some of the benchmarks that you would suggest?
Yeah, no, absolutely. And I think, again, I think the folks on this call, I think everyone has a team or has someone tagged to building a model and working on the cash flow forecast. I'm almost certain of that. And I think certainly when it comes to building a model, I think it's not easy, because a lot of times in our businesses, we have budgets and we have sort of a set template where we, project out what's going to happen next year, and, use that to sort of update, for example, and, tack on your plus 20% or plus 10%, and use that as our base for running things, right? And then we look at it for how close was our actual to budget. And that's kind of what most people are doing generally, year to year, day to day, and quarter to quarter with the modeling. I think when it comes to a time like this, having a real fully articulated model that is really well designed, that has the ability to capture all the different assumptions, allow you to manipulate the assumptions to see how each assumption change impacts your business, from not just a very broad high level standpoint, but also like, how does that impact my week to week? How is my 13-week rolling forecast being impacted by this change that I'm toggling? Because there is so much uncertainty now, and as Earl said, around the different scenarios and figuring out how we need to look at these different possibilities. There's many unknowns. And so we're going to need to, as management teams and as, senior executives and stakeholders and shareholders and board members, figure out what are the impacts of each one of these, because we don't really know how they will move. So we got to try different things. So you got to build a model that has all the assumptions in there, flows everything through, is fully accurate, that all the implications of these are incorporated in the model. So you need to make sure you have the right team. Again, oftentimes in businesses, we have a good set of folks that are doing this on a regular basis, but perhaps they're not used to building models that are as detailed or designed for this type of a crisis situation, and having the right resources, and also having resources that are not only there to build the model, but to be there and stay on top of it. I think Earl made that comment earlier on staying on top of things. And that's really critical here, is being able to have resources tagged to this to update it. Because I wonder how many folks on this call perhaps built a really great model and they haven't been updating it, either with new data from the market or industry players or what you're seeing, or haven't been updating it for changes in what you've observed structurally in the market around the pandemic. So I think having the team dedicated to stay focused on updating it is also very important.
Right. So Ken, you talked about you're always measuring your forecasts, and you're always seeing, where what you forecast and what you've accomplished. So I guess in these times more than ever, how can you speak to how would you maximize value for these efforts, for these models that you put forward? How can you get the most out of what you put together?
Yeah, that's a great question. And so, yeah, and as you're going to put a lot of time into this, and you're going to put a big team on it, or significant senior resources, right? Experienced people, and you want to make sure that what you're doing allows you to meet all your objectives, and that you as Earl said, get the most out of your model. So There's a few things. I think we mentioned it, keeping it updated. You want to keep that model current. It has to always reflect reality. Decisions you've made in the last 4 or 5 weeks, you want to make sure those are reflected in the model. That could be changing some of the structure potentially, or making sure that data is inputted in there. Flexibility and agility. Earl mentioned this as well. Being able to adapt. It is a fast-changing environment. I think everyone here knows that. The announcements from the government are changing all the time, and a lot of that's because they themselves are also constantly working with change, from whether it's around the epidemiology or the global economic tides, or all the different things that are happening. Everyone's working around unknowns, so we're constantly seeing changes around all aspects of things. So we have to keep it flexible. It has to be designed in a way that it's scalable and modular and can be tweaked. We talked about the scenarios. The other one, the point here is making sure that it's designed in such a way to allow easy looks at different scenarios, and that the various scenarios that we're looking at are being updated in our thinking from the senior management team, but also reflected in the scenario options in the model. And then usability, I think this is one that's often, it's a real struggle. It's a battle between having a comprehensive, complete, all singing, all dancing model versus usability. As models get more complex, they sometimes become harder to understand, harder to use, and harder to manipulate and keep updated. So it's very important to have all that back end with the real technical modeling team, but there needs to be user-friendly top sheets that allow you to see all the key assumptions, and for senior management, board members, or department heads and their teams, be able to change some of the assumptions and tweak things so that they can see the impacts on their business and how they should affect their own decisions day to day, week to week, month to month, and for next quarter. So that's really key. And as well, consistency. Some of the companies on this call right now may have various requirements around reporting. Some could be regulatory, some could be to banks and financiers. Others could be just for internal purposes in a bigger group. And if you're going to be designing a model that is running a lot of financial information, it's important to always keep in your mind, how is this impacting my financial statements and my ongoing reporting requirements and various aspects, to make sure that that's all articulated, so you're not reinventing the wheel and running sort of inconsistent numbers. And then again, that becomes a source of discussion at the management meeting. Oh, I saw that number in the forecast, I saw that number in the budget, and here's the number in the draft financials. How do I marry those up? So these are sort of I would say, a few keys that we think about when we're talking about how to get the most out of your model.
So that sounds, there's a lot of pieces there. That's it's almost like a puzzle, and especially with the unknown that we're going through and around these. How do they? Can you speak to how they fit together, Ken? Because it's hard enough to draw forecasts in this time. How do you make them stick? How do you make them work? And how do they fit each other?
Mm-hmm. Thanks, Earl. I think Earl actually summarized it really well there. It's a bit like a puzzle, and you want to put it together. And so we talked about the scenario analysis. We talked about why it's important to have a forecast, and model building, the importance of that, and how all these things really do impact your tactical short-term decisions, but also long-term business repositioning and strategic focus. And that basically means that it sort of essentially hits all aspects of what you need to be thinking about. So again, what we wanted to sort of say here was, with everything around what's going on, you want to make sure you've got everything sort of covered. So from a scenario standpoint, you've got inputs from the external market, you're getting knowledge from your competitors, you've got advisors giving you information, your senior team and your operations team are thinking about what are these scenarios and how do they affect my business. Then you've got your, you use that to ensure that your forecast makes sense. And how can you really have a forecast? It's the model, right? So having that well-built model that we talked about is going to allow you to have your rolling 13-week forecast. It's going to tell you, oh, do I have certain gates where I'm going to, run out of cash or working capital in certain points? Do I have an issue where I need to have financing by date X? Is one of my scenarios not being able to open most of my operations until September? And what does that mean for my employees? What are my other sort of external concerns here? Whether it's competitive from other competitors that are historical traditional competitors, or do I have completely new competitors that are disrupting my market because of this new situation, right? Making sure that that's all included, and then trying to map that to all your tactical decisions. So, you've got lots of things to think about from a contingency standpoint. What if I need to get more financing? When does that need to happen? What do I need to do with my workforce? Those are tough decisions. And, is that there's going to be different things you need to do short term and medium term and longer term. Similarly, having tough conversations with lenders and, suppliers as well on the other side with customers. And how do you manage your working capital and your cash flows there? And as well, figuring out how do you streamline operations, right? Part of this is also, in some cases, this might also help streamline and trim some things from the past that were there that needed to be fixed anyways. I think about one client that has, 30 operations, in the province. And through this exercise, they've been able to identify that some of those operations weren't doing that well anyways. And even in a non-COVID environment, perhaps weren't performing where they should be. So this might be an opportunity to think, okay, well, maybe I don't renew that lease, or maybe I find a way to get out of that lease, and we're not going to have that business go forward, right? That particular location or that division. And so that's just one of the things that this exercise is going to capture all of those things, right? Scenario analysis to the forecast with the model as the foundation allows you to make all those short-term decisions, but also think critically about your longer term strategy. What's being disrupted, what needs to be basically streamlined, and how do we think about repositioning ourselves for recovery.
Yeah, well, that's so interesting you say that, Ken, about non-COVID issues like are bringing to the forefront. And right away in my mind, 3 or 4 examples of over the last few days come to mind where large retail locations are closing half of their stores because they weren't performing. And maybe they probably just noticed or they knew it, but now it really becomes apparent. And it's really interesting when I look at this, putting the pieces together, and it becomes apparent that there are so many variables to work with, and it makes it challenging. That's why this is so key and so important, and you really have to look at it, because some of them you do have somewhat control over. I look at receivables. You just got to be on them. You got to be more aware of them in these times, and offer terms of whatever you can do. There is some control around that. Maybe not so much with revenues and some supply issues, unless you're sourcing other suppliers. But this is something that when you put it together like this, it really makes sense. It's really easy to see. So thank you for that. Maybe we can transition to some of the what's available for employees and employers, to fit this model from government aid and some of the programs out there that has been defined over the last several weeks, but is becoming a little more clear as we move forward here. Was that?
Yeah, no, absolutely. And so I think, Earl, as you said, there is some help out there. So I think, we've been talking a lot about what can we do to plan and what can we do to, figure things out for our employees and with our suppliers and our customers and our own businesses. There is some help out there. And I think as people on this call know, there's been a lot of news around various things. And for example, I think if we think about the employee bucket first, there are a few pieces that, some are fairly well known, but as Earl said, they're still being firmed up in some cases, and it's taken a bit of time. So I'm sure as people have been looking over the last 4 or 5 weeks around the wage subsidy, which is perhaps the program that has the biggest impact dollar-wise for many of the businesses that'll be on the line today, the application process and a lot of the the rules around how do you measure your, revenue drop. The revenue drop itself, of course, is, as many people probably realize or are aware of, the test has gone down from 30% to 15%, making it easier to access this. And as well, they firmed up some of the definitions around, for example, you can use accrual versus cash. You can also have the option of comparing your drop in March or April relative to last year's March, April, or you can look at previous months in 2020. So some of those operational mechanics have been cleared up, and as well, there's been a firming up of the application process and the way you interface with government on that. So that's good, and I think for the most part, I think people are starting to get their handle around that. But of course, please do reach out if you need any help on the wage subsidy. I know we certainly spend a lot of time with our clients helping them calculate, especially some of our clients that have multiple operations or a fairly big employee group. They may need some support around calculating actually what the real wage subsidy application looks like and how they go for it. So certainly if there's a need for help, help is available. The other one that I wanted to talk about today was work-share. And I think, a lot of clients sometimes don't know about this necessarily. It's been around for a while, and it's pre-COVID-19. So it's something that allows you to maintain good employees and key employees while reducing the amount of hours they work. And that's good for the employee because you can reduce their hours managing the cash flow from the company perspective. But in a work share scenario, they're also able to at the same time apply for EI benefits and get some support from the government. So from an employee standpoint, they're getting it from both sides from cash flow. So they're not taking as big of a hit. But as a company, you're able to trim down a little bit on your costs, but you're also able to keep people that you want, because you don't necessarily want to, in some cases, let people go entirely or even put them on a full layoff. So, and historically, there was a limited, half a year period for work share, but now actually work share has been extended to can be as long as 76 weeks, and that's because of COVID. So I think work share is definitely one that's very interesting to take a look at if it fits your situation. Certain buckets of employees may fit this, and because it is a program that pre-existed, it's a very, very clear process, and there's a department that has been focused on it, and there's no ambiguity around timelines or anything like that. So that one that can be quite quick. So I think a lot of your HR teams probably either know about it or know about some of the details, and that's something you might want to think about. The other bit is just around, what's available there from a, letting employees know that things like CERB, I think a lot of people do know about this, and but even providing that reminder or to employees, or even for each of the company executives here, modeling that into your thinking as well. So I think we talked a lot about scenario analysis and modeling, and a lot of that's focused around the company's exact cash flows. And of course, CERB is something that goes directly to the employee, and it's not a company cash flow. But I think as a part of your consideration of your employee pool, you may want to be also modeling out how they're feeling this pain and how they're being challenged. And this is part of understanding what they're getting from the government, so you can put into context the situation they might be in when you're thinking about how you work with them. But as well, in this time of crisis, communication with your employees is really important, and providing them with information around how to apply for CERB and what CERB is useful. I was surprised recently by a few clients that shared with us how their employees weren't aware of this in some cases, and that how valuable they found it getting support from the company on this basis. Similarly, of course, many companies on this call will be already thinking about or have already decided to provide supplementary benefits to their employees, and certainly that things like that go a long way to helping their employees and keeping that goodwill and relationship. And the other bit I would mention here is with these things, whether it be the wage subsidy or other programs, for companies that are already availing of other government programs, such as SHRED, for example, scientific research and experimental development programs, those are impacted by these. So if you were to access one of these programs, that will impact SHRED and perhaps some other government grants that you already have. So it's also very important before you jump into one of these that looks good, that you look at that interplay with like tax credits and other government programs. And I know we've been helping clients do things like that. And sometimes we found that the wage subsidy doesn't make sense in that the shred impact and the hit makes it less attractive to do the fully wage subsidy across all their employees. So just a bit of a reminder on that.
That's excellent, Ken. I think, you know, what the big takeaway for me in that is that communication is really key through HR or through CFO or whatnot. You're right. People are not aware of all these things. I think we're getting inundated with information, all kinds of information, more than ever. And we have more time to look at it, and there's just much more of it. And just if this is coming from a person of authority to speak within the company, I think it's very valuable. And really good point made there. So this you're talking here about employee considerations. I think you want to speak to employer considerations as well. Is that correct?
Mm-hmm.
So, yeah.
Yeah. And so the other piece I want to talk about today was, you know, and as Earl mentioned, was sort of from a company standpoint, what else is out there for me to help you financially? And, you know, so there are a number of things that you want to look at. And of course, your model may be telling you we're hitting a certain point at date X that if we don't get additional support, whether it be from a bank or some external, like new shareholders, additional financing, or some other program, we're going to have a problem. And that could be because of issues with the working capital. It could be because of, you know, a scenario where the revenues just aren't going to be there, right? It could be that you're seeing that your revenue is not coming as quickly as you had hoped. When you did your initial, let's say, forecast in April, you're finding, oh, we're at middle of May now. We're not hitting where we thought. So we haven't built up the cash that we thought we would be able to build up. And therefore, we're going to hit a critical point earlier. Or you find out, oh, you know what? Just heard the announcement. It's going to be delayed a bit longer, in whether it's in BC or lots of folks in this call are dealing with business in the United States or other parts of Canada. So all those announcements, you know, whether they be Washington State or California or Ontario, Quebec, and they all have an impact on our businesses here in BC. So, you know, as those things are changing all the time, we need to make sure that we know when we have challenges around financing. And so a lot of that is difficult this time because not everyone has access to a lot of these programs, but there are a few things out there to help. And I would say one bit is, for example, the commercial rent assistance. Like this is more of on the landlord side, but at the same time, it allows landlord and tenant to both have a conversation and adjust what needs to happen and to make the landlord-tenant relationship sustainable. And certainly I think this is something that I would encourage people to start having the conversations about. A lot of it is still in flux, and as they put it into place, there's still a little bit of challenges in working out the mechanics, but this is the time to actually have these conversations, right? With your landlord to find out what makes the most sense. And if you're a landlord, be proactive with your tenants as well. I would say this is the time to figure out what makes sense and what can be done. Certainly the emergency business account, I think it's a good program. It's not a huge number, but you know, again, this may be one that you want to do yourself, but again, there's a payroll threshold and you need to qualify by being under 1.5 million on your T4 summary for the previous year. But if you're able to pay it off on schedule, in fact, in advance, there's an opportunity for forgiveness of a part of it. So from that perspective, a very good program. And this might even be something that you can talk to your clients, going back to Earl's point around communication with your employees. A lot of times you may even be able to have communication with your customers, your clients, and part of your relationship building is sharing them this type of information, that this program is available and that if they're eligible, that it can be something that can help them in the short term cover some costs. The bigger pieces are sort of the business capital availability program, and the BCAP programs. There's sort of three, and there's understandably a lot of confusion around these because you know I think the government has been doing their best to try to get liquidity into the system and help at this time of crisis. But as they've been doing that, they've had to sort of tweak the different programs. and look at not only, I suspect, how much they cost fiscally, but also how people access them and what makes sense. So there have been a lot of changes, and they've been trying to keep, for example, the government website updated and keep things clear. But as they try to do that, there's been a lot of confusion generated by that. So in summary, I would say there's sort of three big buckets. There's the BDC working capital piece, which is a direct line with the BDC. And that would be for, for businesses that have been impacted and can show how they will recover out of this. You can apply for a $2 million working capital line, and this would be a line that you would draw on. And there would be all the traditional pieces to it, standby charges and there's still a reasonably attractive rate. And I think this also ties into what we talked about earlier, which is having that scenario analysis done as well as the forecast and the model, because when you go to BDC, they're going to want to see how robust your model is, and they're going to want to know what scenarios you've contemplated so they can look at that and go, okay, good. I think this management team and this CFO and controller and CEO have thought about their business. They have thought about the scenarios, and you know what? We can buy into those, and we can see even the tough scenarios, they're going to rebound. We can give them a $2 million line to help them, and they're going to be able to pay this back, right? So I think that, all that planning is internally very critical for decision making, but also when it gets crunch time down to getting some support or funding, you're going to need that. The next piece is the options available out there is $6.25 million in a co-lending arrangement with BDC. So this is through your existing bank. So whether it be, BMO or whomever, you would work with them to arrange a co-lending agreement with BDC. Now, the banks and BDC are still talking about how they're going to do this. Some of the banks, for example, BMO and RBC, have already signed their arrangements together with BDC. So if you bank with those two, you can right now already start having this conversation. Some of the other banks are still having that dialogue with the BDC. So if you bank with another bank, they may still be firming up their relationship with BDC, and they may ask you to wait. But this is something that with the co-lending, it takes some of the risk away from your bank, and it might encourage them to give you more. But again, I think as we talked about, the scenario analysis and the cash flow forecasting and the model are absolutely critical to show how you're going to use these funds, why you need them, and how you're going to repay, right?
Yeah, that's a great point, Ken. I mean, they're not just going to give you this money. You're able to pay it back, and you got to build a business plan around it. But it sounds like there's some really good support there, potentially. Because there's some serious dollars there. And right? And the commercial rent assistance, I know that we're talking about mid-May. Can you elaborate a little further on that? Have we heard anything further?
They should be coming out with more guidance this week, actually. I mean, so I think I would say stay tuned on that one. And I think Earl's absolutely right. There is some support out there, and it's, and also they're separate, right? So you can apply for multiple ones. So, the other one we didn't go into was the EDC, and they've got more ability to lend within Canada now. The export level that was required for EDC in the past was 50%. Now it's 15, so 1.5. So there is more money out there. So in theory, you can get all three of those loans. Actually, there's no restriction on that. So thank you, Rob.
Recall, Ken, in the emergency business account, this is per incorporated company. So if you have multiple companies, you can apply several times, correct?
That is right. Yeah, no, thank you for raising that. This is by legal entity. So it's not by payroll account, as some folks may have thought. It is by legal entity. So you can, especially businesses where you have a number of companies or franchises, each one would be eligible separately.
Okay. Well, it sounds like there's something there. So we've been here for about 8 weeks or so. Where do you think we're going to go from here? Where do we go from here? What are you guys looking at?
Yeah. No, I mean, obviously, we don't have a crystal ball either. And I'm sure, I think one of the things that I think we've been doing is trying to help all our different clients and having a lot of conversations with people. And so, again, I guess we're able to see perhaps perspectives from many different companies in different industries. And, and with what we do, we try to think about the longer term. And I think the way we try to think about this from a recovery standpoint is, as an executive team and as you're doing all your thinking, whether you're the board or the shareholders or management, try to think about on a continuum the degree of change that's going to be happening in your business, in your market, in your sector on a permanent basis, and also the pace of this recovery, right? And these are the kind of, if you look at this, the diagram we put together, those are the kind of the axes you want to kind of think about where you fit in on. And so again, what we presented here is preliminarily right now what it might look like for these different sectors along these axes, right? If you think about certain technology companies like streaming media, I mean, the pace of recovery is going to be, it's, in fact, there was never any decline really. So that's huge. And then the degree of permanent change is probably quite significant, right? Their whole industry is booming. And in fact, you're seeing essentially now a situation where you're surging, right? Other businesses, for example, restaurant or hotel or maybe have very different challenges, right? There may be longer term structural challenges that are happening right now, but will your business be completely disrupted? Perhaps not, right? It's very tough times for a hotel or destination right now, but does it mean it will completely go away in the future? It's completely changed? Not necessarily. So you might fit into that longer recovery where it's going to be a certain amount of time, which we don't know how long it will be, but ultimately the business is still there largely as it is. Whereas something like a restaurant or a food service piece, that might be very, very different, right? The amount of permanent change in that business could be very significant. And that's going to have a big impact on the recovery, again, depending on the type of, food or retail you might be in. So I think the overall message here is it's really important, I think, to be, and I think obviously people on this call, I'm sure, are very aware of this, is understanding what's going on in your own business, but also what's going on in the market with your competitors, what's happening trend-wise, what are the consumers doing, and what are your customers doing, and how are their mindsets changing? I think all the people on this call today, I'm sure, have been experiencing living at home and working from home and using Zoom and, doing things completely differently. And some of the things that have happened, I think people will gravitate to and they might stick with it. And so we have to be aware of those preferences and think about how that impacts us go forward. And, again, that's part of our longer term scenario planning. And that's part of what we need to think about from a strategic standpoint. And, things like how long will this last? Have I missed anything in my critical assessment? What are the KPIs I should be tracking now, but also in the future? How do I pivot, to go to market now, but also in the future? What do I need to do to recover? What are other risks I need to be thinking about, right? What are other organizations doing? And then thinking about how have my actions in the past 5-6 weeks been? Have they been effective? What do I need to do now in the next 5-6 weeks? And then what is it going to be 6 months and 12 months? So I think ensuring that we have taking a step back and having an overall view and thinking about the longer term, I think is really important at this time. This is the time to be doing that and reimagining and planning for that future and lining up all your pieces to be ready for it.
Yeah, I really like this slide, Ken. This model. I think this is something you really got to use in concert with your scenario analysis when you look at what industry you're in and to plot out how long it may take. And so one of the things I notice on it between the long U and the V recovery, there's been a lot of talk of a second phase of, in the winter or during flu season. So that V could be a W, in fact, and that U could be a really long U. Can you speak to that a little bit and your thoughts around that?
Yeah, no, that's a great point, Earl. And I think, I think what you said there is it really underscores the importance of the scenario planning and doing this longer term strategic thinking in a critical way and challenging yourself. So as you said, look, in flu season we could have another wave and maybe we're talking about a W scenario where it's another sharp decline. You say it could drag out the U, right? Because if we never really come back in the next couple of quarters, we may be sort of in a lull and we get hit again and we'll just stay in that rut. I think it's really important to model that out. That's why I say I've had some conversations recently, and there are businesses right now that it really is appropriate to take a really hard look at recovery or restart back to normal business happening in Q1 or maybe even Q2 2021, right? And some businesses may really have to contemplate that and be operating in a very, very tough environment for a year or longer. And we talked about financing options and getting support, and you may need to get financial support from your bank and from the government and have those challenging conversations to show, look, we are going to have some tough times, but here's how we're going to come out of this long view, and this is why it makes sense. But no, I mean, Earl's absolutely right. I mean, there's going to be some businesses that are going to be actually scrambling for money right now, just trying to build up their businesses, right? There's lots of businesses right now that are, again, surging, and they're seeing that continue, and they're actually scrambling to get more financing for expansion and to address the needs of customers, right? So yeah, no, I do think that is certainly something that could happen. And when we look at Asia, for example, and we do keep in touch with obviously our Asian counterparts and our clients there, and they're going through something like what Earl described, the second wave right now. And China's wrestling with it. Singapore, they had to close schools again. Taiwan is being very careful. So, similar to Korea and Japan. So we need to monitor that very carefully, I think, and take a look at what's happening to our global neighbors and understanding what they're doing and learning from what they're seeing, because they're a bit of ahead of the curve than we are, and seeing how we can leverage some of their experiences for our own planning and strategies here.
Right. Well, I can certainly go on for hours, and I'm sure you can as well, Ken. I just want to be mindful of time for everybody and maybe circle back and see, are there any comments or questions that anybody has? I haven't noticed any in the chat, nor have any hands gone up. But if someone puts their hand up, we can unmute them if they'd like to ask a question. Does anybody have anything or any comments?
So Rachel Mason, I think, it looks like she may have raised her hand.
Okay, did I miss Rachel?
I saw it on my screen pop up, but.
Oh, there we go. Yeah, okay. I'm gonna unmute Rachel for us. Rachel, I've unmuted you. Can you go ahead with your question, please? And thank you for asking. Bear with me a second.
Hello, can you hear me now?
We can hear you.
Yeah.
Okay. So I just wanted to go back to the emergency wage subsidy that you talked about. So we're in the position, I work for St. Jean's, and we're in the position where we have been able to stay open as a food processor. But we have a number of different revenue streams, and where we've seen one of them ramp up quite substantially, a number of them have declined quite drastically. Are we eligible to even apply for that, or is it overall, if we're one legal entity, it's kind of revenue as a whole?
Yeah, no, that's a great question. At this point, it's more around your company as a whole and your business. If they were, if it was a group company with multiple businesses that were separate, absolutely, the businesses that are in decline, you'd be able to apply for it. But in a scenario where, on aggregate, your company is not showing revenue decline, then you would not be eligible for that.
Okay. And could I just ask a follow-up to that? And this may not be something that you can answer. It's like crystal ball time, but we're certainly projecting that over the summer, we do a lot of sport fish, which is highly unlikely to happen. So will these like emergency wage subsidies and these supports, do you see them continuing on, well into the back end of the year? Because companies, as soon as we can open or continue opening, they're not all going to kind of be able to ramp up their revenues immediately. So do you see these supports staying there for the foreseeable future?
Well, I mean, it's tough to say, certainly, as you say. We've already seen them extend it once, right? So could it happen again? It's possible. It's hard to say. You made the comment to the end of the year. just as a guess, it seems unlikely they could extend to the end of the year, the calendar year, but could they extend another couple of months? Possibly. Again, it is tough to say. I think they're probably struggling with a lot of different things around. I think everyone sees the media as well as they roll out more programs. Obviously, the costs of the programs and the impact on the budget and the debt also are looming as well. So certainly it is anyone's guess how long they'll extend. And I think it also goes back to Earl's point earlier of, will there be another wave? How do the BC cases go? I mean, they've announced that they want to try to allow schools opening in June, right? June 1st. So, will having schools open and a lot more people back at malls and, Parks Board hasn't decided yet, but if those things were to happen in June, July, could that in itself trigger more cases as well? It might, and that could also have an impact on things. So again, it's tough to say.
Right. Okay, thank you.
Thank you, Rachel. We have a Chris Ball. Ken, how do you anticipate businesses and, there's a couple of questions from Chris. How do you recommend messaging key points of this to employees?
Yeah, no, and that's a great question. And Earl mentioned that as well, the importance of communications. And, I think you want to give the employees honest messages around what the shareholders and what the board and what the senior management are trying to do, right? Be honest with the business prospects and how this significantly impacted is and how everyone's working together as a team. I think that's really important, right? I think the business is taking hits, the shareholders are going to take hits, senior executives, again, it depends on how you decide to tactically approach this, but I think a lot of businesses, you want to be doing it in a as fair basis as you can. You want to show your employees what you're doing, how you're thinking about them. You're thinking about work share to get them EI while they're reducing their hours. You're thinking about their CERB. You're thinking about, the subsidy to get them more benefits. All these sorts of things. I would say make sure you have an honest, open communication. And Earl mentioned the point of regular communication. I think a lot of these things are changing all the time. Providing regular touch points and saying, hey, here's something new. Have you thought about this? Or here's a new program. We can help you calculate or apply. Or here's the link to the website. It could be as simple as a link to a government website with an updated application form. And they realize, okay, wait a minute. My employer's really thinking about me. Similarly, things like even a lot of the benefits include mental health, counseling and conversations. A lot of people don't even know that their medical program might include a few hours of counseling and maybe it's just a few conversations with a expert that's going to help them feel a lot better about themselves and their situation, and reminding them of that can be very valuable. Or even things around just general health and wellness, having more communication and using that as a tool to maintain that relationship, show that you care, and again, being honest about the business prospects and how you see their contribution to that in the medium, long and short term, I think is really important.
Thanks, Ken. How about, I have another question from Chris. Do you anticipate business and personal tax increases? And probably short, long term, I would anticipate. Short term, I wonder.
Yeah, no, I don't think, I haven't heard much talk about short term, that's for sure. But longer term, could there be something that is done to, because, as we discussed, there are financial implications to the programs that are being put out, right? So will there be a need to possibly on the tax side, or is it going to be curtailing other programs or things of that nature to balance the books down the road? It's possible. I certainly haven't heard anything yet in terms of plans or any heads up or warning signals at this stage.
Okay, thanks for that. Any other questions out there? Looks like that's possibly it. Ken, I want to thank you so much. This has been so informative, so insightful, and it's just great to know that we have several tools to help mitigate this risk. It's an excellent job. I could listen to this for hours, actually. There's just so much here.
Earl, we do have another question that was posted. I think it was just posted directly, so I'll read it out. What is the required revenue drop for the periods after June 6th up to August 29th in order to qualify?
Yeah, so there'll be, it should most likely be the same requalification as April, May. It should be, we expect it to be 30%. But, could that change? It's possible. But I would anticipate a 30% threshold. Yeah.
Thank you.
And one thing I think, as Earl mentioned at the outset, a lot of these things have been changing and are changing. I would say definitely stay, monitoring some of those, the programs. And as well, I think I would just offer up that obviously Reliance and KPMG were available as people get more questions or more, thoughts or requirements, certainly reach out and let us know. And we're here to help.
Yeah, thanks for that, Ken. I mean, that's a big part of what Reliance and our partners like KPMG like to bring to our clients, really. It's risk reduction. That's what we're talking about here. And I just want to, as a reminder to everyone out there, we've seen a huge spike in cyber crimes during this pandemic. Everything from cyber attacks, extortion, email phishing, social engineering, and fraud. And the last thing we want to see is anyone suffer a financial hit over something that frankly is manageable and insurable. So we encourage everyone to seriously look at this exposure and consider purchasing a cyber policy, or at the very least, get a quote. It's not really that expensive, and we've seen like the losses are frightening in the amount. So we're happy to help you navigate through this. So please reach out to myself or your broker for more information. Again, Ken, thank you so much. Really great presentation. Thank you everyone for attending. This presentation is available to all who attended. Thanks for an excellent discussion and presentation, Ken. And thank you so much to Kane and Andrea from the Reliance team for helping put it together.
Yeah.
Peace, everybody.
Yeah. Yeah. Thank you, everyone. It was great chatting with you today.
Appreciate that, Ken. Thanks so much.
Thank you.
Thanks, Ken, and thanks everyone for attending.
Thanks, Andrea. Thanks, Kane. Thanks, Earl. Thanks, Mark. Thanks, everyone.